Mr. Mark Selby, how are you?
I am great. It was great to see you actually in person last week.
Oh,
the first
my
time
goodness.
in 2 years.
So good. It was so good. It's so good to see you and everyone else. Of course, you're well and healthy. We haven't sent you home with an Omicron, have we?
I have not seen any Omicron lurking around my house yet. So that's good.
Good. I'm glad to hear it. Well, we thought we'd get back into it with the weekly nickel shows. This week is a corker because I think we've talked a few weeks ago about face-ripping pricing for nickel. I think we're about to hear a little bit about what you think is coming up soon. So why don't you start us off where we are today, and then I want to talk to you about Indonesia.
Sure. So, in nickel's fine form, we had a week where prices went up almost 10%. Intraday went from under $9 a pound up to 980s. Those of you who are in the metric sort of below 20,000, up towards 21,500 in just a week period. Again, what was the big trigger was Indonesia. We'll talk a little bit about that shortly. Again, more broadly, we're continuing to see, it doesn't do it on just a single data point, but again, inventories are continuing to tick down. From the last time we did this a few weeks ago, inventories have come off another 15,000 tons or so. So we're down to 120,000 tons a day, which is about 2 weeks worth of consumption at today's level. One thing to point out, because nickel is such a high growth metal, we nearly have twice the inventory that we had at the prior market low. But because demand is twice as high, we're actually starting to get into the range in terms of inventories where we were when nickel prices were $30,000-$40,000 a ton back in the mid 2000s. So it'll be interesting to see sort of how that progresses over the period of time. But again, the big driver of it was really around, this talk of a potential NPI ban in Indonesia. And so, we'll see how that's going to play out. And I think, it's going to be a very interesting year on that front in 2022.
I think so. And before we get on to that, because there's a few points, because we've talked about Indonesia and the Philippines and China a lot in past shows. So I do want to get on to that and check a few things with you. But just back to this, the other kind of pricing in 2021 for precious metals was not what people expected, given the talk of the economy and these huge infrastructure budgets which are having to be signed off. I think the precious metal guys are like sitting around wondering around, going, "Hey, that really didn't make a whole bunch of sense to us." But 2022 is the year,
right?
And if I looked at some of the battery metals, not the battery metal prices, okay, I'm talking about the equities. They too were somewhat subdued, given the narrative, the conversation, the supply-demand fundamentals in terms of the economics and the ever-widening gap and these huge infrastructure plays going on. Do you think battery metals and of course nickel, suffer from the same fate as precious metals in 2021, in that mining just wasn't flavor of the month? And what do you think is going to happen in 2022 as a result?
I would say sort of, where we started the year and where we are now. I think, we had, there's a lot of hype in February at the start of the year around battery metals in general, and we saw, again, most of the nickel equities hit their high back in early February. But at the same time, you had the market analysts talking about big surpluses in nickel. No one said lithium prices were going to explode. No one said, cobalt prices were going back up to $30 a pound. But I think, fast forward 9 months, we've seen sort of that flip where, some of the hype is really drained away. But fundamentally, we've seen, nickel that was forecasted supposed to be in a multi-% surplus by literally every analyst at the start of the year is on track for the largest, market deficit ever. Every lithium, there's been talk about lithium for nearly 7 or 8 years now, and lithium is really finally having its day in the sun, with a lot of the equities, trading up, lithium carbonate prices, all of the prices in the lithium chain, close to all-time highs. And so again, this just reminds me, and I've probably said this a few times, but really want to drive it home, is this really reminds me of 2002, in terms of the China story, where, again, you had your evangelists, but the rest of the market was pretty skeptical about whether this was going to translate into real demand. But the reality is when you have a high growth source of new demand, then the numbers can get pretty kooky pretty quickly, and that's really what we've seen this year with demand from the EV sector up over 100%. And so for nickel, we still have a big use in terms of stainless steel, which also grow really quickly. But for metals like lithium and cobalt, where EVs are going to be a huge percentage of their future demand growth. In case lithium, most of it, it's really sort of made for an interesting year, and I think sets the stage for an even more interesting 2022. Because again, typically what you'll see is the analysts are going to have to play catch up because they don't want to admit that they were too wrong last year. So they'll be a little less cautious on their forecast, but they'll still be way too cautious relative to what's likely going to happen next year.
And what about the companies themselves in terms of being fully valued? However you want to measure that. Some people talk about enterprise value. Some people talk about NPV ratios. Do you think that a lot of companies probably overran and are still yet to backfill that valuation?
For sure on the nickel front.
Yeah,
we've seen most of the you pull the charts up over the last 24 months, you'll see most of the nickel developer stage companies all hit their highs in mid-February. And most are still trading off, at least a third since that point in time. So again, as I said, I think on our last call, I think, through the end of this year will be an attractive entry point. And then again, I think you'll see a surge of new money coming into the sector towards the end of this year, early January, as fund managers who've made a lot of money through the first 10 months of the year, kind of protecting their portfolios, and are going to wait to step into new stocks close to the end or at the beginning of the new year. So they have 12 months to be right or wrong.
Right. So how should investors view that? Is it a kind of waiting period to see these companies actually start to deliver on some of their activities? Or is it just going to be all market driven, in which case it's kind of irrelevant where they look?
No, I think, again, the key thing is to look at is, again, when you have some hype, everything sort of floats to the top. Crap and companies that actually have good projects, things through the end. And again, too, when the hype completely drains out of the market, again, everything can get pulled down. So don't look at, the relative pricing. Really look underneath the hood and understand, okay, has this company in 12 months materially moved the ball, during that time frame and added a huge amount of value that when we get to the next hype entry point, that those stocks are going to perform extraordinarily. And so, again, I think in the nickel space, if you look around, there are companies that have managed to add some significant value during that time frame, including, I think Canada Nickel. And so, I think this is a great time between, now and year end, we're going to see lots of Omicron, sort of scare news. And so, in these market sell-offs, just pick away at the stock and be ready in January. Because the tricky point, if you try and time these, if you just look at the charts in the first 4 or 5 weeks from in January and February last year, half the run up happened or 3/4 of the run up missed and it ran up in 10 trading days. So if you're sitting there waiting to time it perfectly, you might find yourself chasing the market higher and really losing a place to get an attractive entry point. Because again, the thesis being that this is going to be, a multi-year trade, and you want to make sure that you're at the front end of that trade. Again, just using the China analogy, for the people who got in 2001, and were in the first leg, you probably made, 5 to 10x during that time frame. If you were there for the second leg, you got another 5 to 10x. But the key thing is, if you got in at the beginning and had a 5 or 6 view in terms of how China was going to unfold, you made anywhere from 25 to 100 times.
Yeah, absolutely. So it's in that sense, I just want to be clear, in that sense, Omicron or not, because obviously we saw a little bit of a reset, and we'll talk about it again in a second. We saw the market sort of react to that across the board in terms of what the implications are without necessarily understanding much about the new variant. Oh, no. So, but that's fine. That happens. Take advantage of it. I know I certainly did on Friday. So you think in terms of where the nickel fundamentals stand, in terms of infrastructure build outs, in terms of battery plus its in terms of the battery revolution and nickel feeding into that, and its existing markets, it's steady as you go, with a few sort of wild jumps somewhere there in the middle as well. So you're happy looking into the future. New variants don't put you off the investment thesis for nickel.
No, not at all. No, I mean the supply demand, the overwhelming amount of growth that's coming from EVs on top of strong stainless demand. And again, using that China analogy, from 2002 to the first part of 2005, nickel prices were up 5x. They retraced. It was a painful retracing. We had a merger bid out with Falconbridge that was painful to watch nickel prices retrace. But again, if you reloaded at the end of 2005, nickel prices 16 months later were nearly up another 5x, up to $54,000 a ton.
Right.
So
okay. So I think all bodes well. Be confident. Okay. If you're into the nickel thesis, or if you're not yet in the nickel thesis, it ain't too late. A long way to go. Let's come back to the limiting of permits by Indonesia for new NPI projects. I mean, why did they do that? And more importantly, what's the knock-on effect here? Because there's a massive, unlimited supply of NPI, isn't there?
No, I mean, that's the key thing is, what popped the stock last week is, there's various government officials making musings about banning nickel pig iron production, just like they did with ore. What they want to do is to see that NPI, which is sort of one step of upgrading, either get further upgraded into stainless steel, or in more of a focus now for Indonesia is into more battery materials for the market. Again, all of them are going to have massive carbon footprints until they find a way to generate massive amounts of renewable energy. So, this is primarily for the China-Asia market and not Western supply. But if you step back and you say, if you look what's happened over the course of the year, there's a real narrative emerging in terms of, is this NPI production really an unlimited resource or not? Because that's the bears. They say, look at, I heard bull stories for nickel for a while, but it's all, Indonesia's just killed it every time over the last 10 years. But if you go back to last spring, Indonesia now say, look at, no more nickel pig iron projects. It has to be an integrated stainless or battery materials, because we're starting to get nervous about the size, about the resource that we've got, and because we want to have a long, sustainable position in this EV sector that we think is important. The other piece is, unfortunately, the only sort of public window that we have into what's going on there is a company called Nickel Mines, who trades on the ASX, and they publish their quarterly production data. And what's fascinating is in just 3 years, we've seen nickel grades from that mine drop from nearly 2.1% to just over 1.7%, which again is 15% decrease, in feed. And again, that's effectively, throughput, through that mine, through that plant. So, that's a big deal. Yes, we are going to have a huge amount more production next year, another 400,000 to 500,000 tons. This is sort of the second leg of the big ramp up. And again, I think that'll keep prices sort of, in the $9 to $10 a pound range, or the $20,000 to $22,000 a pound range. Because again, 22,000 was a big level. But I think if you connect the dots in terms of what we've been seeing from the Indonesian government this year, it's much more likely that we'll see some sort of NPI ban happen in 2022. It was a tremendous success. They've probably seen more foreign direct investment, all from China for the most part, with a few Western companies tagged in there, than any other developing country, trying to develop its resource base. So it was a huge winner once. I think they'll look at it as a huge winner twice. And if that happens, again, the risk to the downside in the nickel prices, the cost of power, coke, everything in China right now is keeping, nickel pig iron costs close to $19,000 a ton. So, we don't have a lot of downside, and anything like that, is going to be, push prices, a lot higher, a lot sooner than I would be expecting.
Right. So Indonesia looking to capture more of the value down the supply chain. China, the only person, when you talk about foreign investment, we were just literally talking China. It's going to be very hard for anyone to kind of get in there and compete. So that's great for China. it also kind of sets the tone for what the West's going to have to do. Which obviously, you've got a Canadian project there. You've got your lovely cousins in the South baying for nickel. Do you think we're going to see some sort of bifurcated market? Do you think the Chinese will win out because they're the only ones who can afford the capex to invest in big infrastructure projects? I mean, how's it going to play out?
I think, there's a huge amount of airtime on the class 1, class 2, which I think is the wrong one. I think it is really going to be, Indonesia based high carbon supply and then lower carbon supply from the rest of the world. And, what's been fascinating over the last 4 months is, the auto companies, we're always interested. Again, I've been in discussions in past life since 2017 with various auto companies in one way, shape, or form. But I would say, in terms of the volume intensity level, in terms of which they're pursuing things, it was kind of at a 3 or 4. A couple of years ago, it's now cranked, way up to 11. For the fundamental fact is, again, I think they're focused on getting the car platforms out one. Then they went and got the battery JVs out, and they've been announced all those over the last 12 months. Still a few more to go. And now they're realizing, we called up Glencore and we called up Vale, and we'd say, can we please have some, like half of your output, a quarter of your output by 2025 and half your output by 2030. And, Glencore and Vale, politely inform them that, as high purity nickel producers who produce certain product shapes and forms, that, pretty much all of their nickel is already going into, effectively specialty applications, with very little nickel going into commodity applications, where they might be willing to part with it for small premium. So, as one of the Vale sales guys told me, it's like, if you want nickel, you just tell me which of my existing customers I'm not going to sell to during that time frame. So, so I think that reality has really, really set in that, it's like, there is not, there's very little to no capacity in the West other than a few projects like ours that are going to be ready to go this decade.
And let's, just for people who are not functioning yet, haven't had their morning coffee yet, let's be really clear about what that means. It means pricing becomes an interesting topic in those discussions because whoever pays the most gets it, right?
Yeah. No, at the end of the day, that's going to be it. Elon Musk has already been moving a series of car models over to lithium iron phosphate from nickel. He's not doing that because he wants to slash the range and make it less attractive for people to buy an electric car. It's because, they have, they're not seeing the visibility on the amount of nickel that they would like to do at the right price to do it. And again, if you don't think you can have a geographically bifurcated market, all you have to do is look at the stainless steel prices. There's nearly there has been for quite a period of time, nearly a 30 to 50% premium for stainless prices in the US and Europe, versus China and Indonesia. So, those things can appear for the right reason. And, again, I think that the carbon footprint of the production in Indonesia is going to potentially create some pretty substantial premiums available for Western-based low-carbon supply, that can come on this decade.
Yeah, interesting times ahead and not too far ahead at that. But I want to talk to you about where any new supply could come from. I saw an announcement by you guys last week, and I think the market reacted extremely positively to it. You've been joining up the dots in the background, Mark, haven't you?
Yeah. No, we announced we completed 18 deals to acquire 13 new targets in the Timmins region. If you look at nickel deposits, they sometimes occur as one-offs, Voisey's Bay, Nova Bollinger. Other times they occur in clusters. And so, we really think that the Timmins region is going to join the list of the half dozen nickel regions, Sulawesi, Northern Siberia, Jinchuan, Sudbury, and Western Australia as, a prime nickel producing region. So, we've got the geophysical, footprint to be able to use. And that's what we used to come up with these targets. And then we looked at historical drilling that was done in the 50s, 60s, 90s that, again, this 0.3 to 0.4% nickel that we're targeting was not, was just fundamentally not economic at that time frame. And so, in the history of nickel, it's not been new discoveries that have been the new source of supply. It's been a new way and a new market to think about some existing resources, whether that was Sudbury in the early 1900s or whether that was, Sulawesi in 2005, which, again, all of this NPI that's coming from Indonesia, it's not because it was discovered now. It was actually, if it hadn't been drilled off earlier, the rest of it was, all of Eastern Sulawesi was drilled off by Inco in the 1960s and 70s. And so, we think that same change in lens, with a new source of demand from the EV market that wants a low carbon market, makes what we've got in Timmins, going to be one of the world's largest nickel supplies. And been telling people, look, if you had a chance to buy Inco in 1902, or if Tsingshan was publicly traded and you could have bought it in 2005 or 6, would you have done that? And I think the answer is a very definitive yes.
Well, let's be clear about that, because there's a few kind of broad statements there, and I want to understand that what it actually means. So when we talk about districts like Sulawesi or Sudbury or East Goldfields or Bushveld or Jingshan, how big are we talking? And when you're likening yourself, because companies come on here and they go, "Oh, we've got loads of targets." I kind of go, whatever, right? Yep. Targets, yep. Schmargets. I want to know how you move them, up the value chain. And we also get a lot of companies come on here and say, "Hey, we're kind of like this big $1 billion company. Sure, we're only 20, 30, 50 million, 100 million, but we want to be like them." So I want to know what's giving you the confidence to liken yourself to those big districts, and what you've actually done to identify these targets, which makes you quietly confident that you can back that up.
Yeah. So just fundamentally geologically, to make a nickel deposit, you need a rip in the earth to get down to the mantle. And those rips don't tend to be little rips. They can be quite large. And so so that's why, again, Eastern Sulawesi in northern Siberia is where, you've got literally 10, 15, 20 million tons of contained nickel, in a whole series of deposits. In the case of Sulawesi, it's closer to probably 50 million tons of nickel that's just sitting in one half of one island and a couple of islands off the coast of the main one. So geologically, the way they form can do that. Number two, again, understand it. There's a politically incorrect statement about anomalies. Comparing to a certain part of the human anatomy, everyone's got one. Is the key here is this isn't just it's a little bit of color difference, and sometimes maybe when you drill them, you sometimes maybe get a hit. These types of deposits have a very distinct geophysical footprint. We proved it with Crawford and some of the surrounding properties. But what is so amazing about this, and why the press release was 35 pages, it's not like, we just have a geophysical anomaly and we kind of guess maybe that there might be something there. It's because people were drilling for other minerals, or drilling at a time that it didn't come out as bright, shiny core that was a couple meters long, they didn't bother assaying it. So, we literally have thousands of meters of drill holes where, people have already delineated, the kind of mineralization that we're looking like, over kilometers of strike length by several hundred meters wide of strike length. And all we're doing is taking drilling that happened in the 50s and the 90s and maybe in the early 2000s. And we're just looking at that whole system relative to the target we've gotten, going, wow, this is, and we highlighted in the release a bunch of drilling results, that if we pulled one of those out today, that would be a brand new discovery. So we're calling them uncoveries in terms of the half dozen or so deposits that have, already been drilled off, to a decent exploration level.
Uncoveries.
Uncoveries, yes.
Are these uncoveries of white gold? I need to know where I'm looking
at.
Yes.
Well, the other part of this too, in the context of a zero carbon environment, we just got, another 13 deposits. Crawford, the total resource is 900 million tons on less than a square kilometer. And all of those tons if they're exposed to air, want to soak up a certain quantity of CO2. We just got 37 square kilometers of material that is all close to existing infrastructure, in a region where you can actually build some industry, that would be in a great position to take advantage of the carbon capture potential of this rock. So, as I've been jokingly said a few times, we might be ending up as a carbon credit mines with the byproduct nickel product. So, we'll see how we go. But it's honestly, I've said on the conference call, this is the single biggest announcement of my mining career. We've had a great market reaction, but I don't think people really understand just how much stuff we've uncovered.
It's insane. Well, like you say, on the carbon capture side of things, I can't wait till you come out with some sort of number as to what the equivalent of that could be based on your, I know it's the lab research only at the moment, but in terms of what that could mean, are you soaking up a year's worth of US car travel or something? I can't wait till you do the work.
Yeah,
come up with a number for that, whatever that ends up being. Well, look, brilliant, Mark. I mean, what's the next step with that? I mean, great announcement, but you're going to need to finance moving those projects forward somehow and give guidance as to some sort of time frame that people could be looking at. Or is this just setting yourselves up for someone to walk in and do the heavy lifting for you?
No, I mean, we're setting it up, primarily to demonstrate the district scale potential, we always said we're going to get 50 to 100% increase in the Crawford resource, which would be to 2 to 2.5 billion tons. So defining another 500 million tons up to a specific level is not going to add a huge amount of value right now. But what we really want to do is just with very wide space drilling, where people have drilled stuff, just didn't do assays. We'll go back in and assay some of this material and work our way through those properties without spending a huge amount of money, because I'm not raising a whack of money until we've got the right value for Crawford. But we'll systematically work through the highest potential properties, and over the course of 24 months, hopefully, clearly demonstrate that we've made, another 2, 3, 4, 6, 10 Crawfords, in that area, which I think is, profoundly exciting.
Okay, so you're not getting distracted. You'll get Crawford in the bag, try and understand what the value of that could be before you then move on and employ meaningful capital elsewhere. But
yeah,
right.
Exactly.
Okay, understood. Great stuff. Well, look, Mark, I appreciate you coming back on here. You must be knackered after all of your travels. And we'll see you next week.
That sounds great. Thanks, Matthew.